Hey everyone, we have a lot to cover today. We have an exciting market dynamic shaping up right now. We have the cryptos ripping up sharply, and we've had very bullish action in the stock market as well as many commodities across the markets. This is an update on Dash, and we have the chart for this in the description below. So check out the links if you'd like to take a look. But along with the rest of the crypto space, we're seeing a lot of upside action, and it looks far more convincing than anything we have seen since our bottom way back on May 12th or so. While we could consider our rally from that point up to the present time, the recent past, impulsive, this is looking far more convincing. So I'm not going to go over the anatomy of the crash, which we went over in the last update, but we actually fell well past our expected target range, at least on the big picture, but also on the small picture. Our bottom is officially, as of now, around $43, a little bit over that. And since then, we had what could be considered a five-wave rally. You have the blue numbers marking a 1, 2, a 3, 4, and a 5. I don't love the shape of this, but we could take it for what it's worth. It's actually probably better measured counted in this manner, with the first wave being that back here, maybe a 1, 2, 3, 4, and a 5. That would actually not break any Elliott wave rules because our fourth wave low would not overlap the peak of the first wave. But that is history. Assuming we have a five-wave rally in place, we had a downside setup in place, and it looked like we were about to go down. That's what is being specified by this red 1, 2 to the downside. But that has invalidated because not only did we rebound, we actually have had a higher high. So if anything, this is looking like it could be a nested 1, 2, 1, 2 setup. And for you TA people out there, technical analyst people, it could be a cup and handle pattern we have shaping up. That's what the Elliott wave equivalent is, in which you have you have your cup and your handle. So it's usually again a correction off of the this is the second wave pullback, which I actually didn't mark. Let me add that on there to clarify what that is. So that would be counted as our wave 2. So you got your cup and your handle. If this really is a 1, 2, 1, 2, the reason why I believe it is a nested 1, 2 setup, 1, 2, 1, 2 setup is that when we look at this, on the bigger picture, you have your larger 1, 2 with this Fibonacci extension setup. We hit the perfect target zone between the 0.32 and the 0.618. That's where you expect a nested 1, 2 to set up. And we have sufficient divergences. We had our MACD, our MACD gets stretched on what is very likely the third wave and the fifth wave up. So this is convincingly an impulse here. And we had a very shallow second wave, which is possible. And well, we went off pretty high after that. So it could be another nested 1, 2, 1, 2. Right now, we haven't broken through our pivot zone yet, which is again between $67 and $70. That is the 0.68 and 0.764 extensions. And we've had a bit of a sharp pullback, but it could just be resetting us for the next higher up, next rally up. We've seen very similar action in the stock market over the past week and a half, in which we have colossal rallies and sometimes sharp red candles to scare out the bears, the rest of the bearish sentiment, and then exhaust the bearish sentiment, and then we've been ripping back up. So that is my current view. We're going to look at a couple of the other coins as well, but the alternate view is that the red is still alive. I'm not taking this off the chart because there's still a chance for downside until we have a bigger, larger, and more clear impulse. So that would count this all as being possibly an A wave, B wave, and then this whole thing being a C wave. Actually, it might even work better like this. Either way, it could count it as an A wave up, B wave, and a C wave in progress right now. And C waves can go pretty high. So I would say if we go all the way up to $83, it could still be a C wave until we see a bigger fourth wave and a fifth wave up. We're not out of the woods yet. This is what it could look like, assuming that our pattern is correct. We would expect to see again a 1, 2 that we already have in place, a 3 that goes up between $83 and $88, fourth wave consolidation that goes pretty sideways, and then our fifth wave should get us somewhere between $91 and $96. That is what we'd expect to see, and a corrective pullback. If we can get a pattern like that, that would be a very strong sign that we are absolutely done with the crash and ready to rock it up. So look for this thing to rally. As promised, when we look at some of the other coins, I'm going to look at Bitcoin Cash first. I know I got an update that's coming out very soon on that, and I've been using this as a proxy for the rest of the crypto space, and the pattern is very similar here. Very nice rally. One could count this as maybe this is a 3, 4, and the 5. It fits a bit better on the Bitcoin Cash chart that this is actually the fifth wave top, whereas in Dash, I have it counted differently. So if that is the case, then we would count that as the 1, and then the second wave would be in progress right now. So that is a possibility. I'm going to leave this as is for now. We'll see what shapes up. So that's Bitcoin Cash. And when we look at our other cryptos, Ethereum doesn't look quite as exciting right now because, well, we've had an impulsive looking rally, but we haven't rallied as high. But Ethereum has been a little bit laggy compared to a lot of the other crypto coins. Bitcoin looks a little bit better, in which we actually did get the higher high, and it is rallying ahead. And if you notice the internal structure, the shape of all of these coins, this rally, you don't have very sharp pullbacks. It doesn't look choppy. You see a lot of sideways consolidations. That's a sign that we have very bullish sentiment underlying. Whereas if you have really choppy pullbacks, really sharp pullbacks, that's usually a sign that it's very corrective. That's what I mean by corrective. Corrective looking means there's a lot of chop back down while we go up. Ending diagonals are a good example of that. Or if you have ABC zigzags up, those are all examples of choppiness with some residual bearish sentiment. We're not seeing anything like that here. And in Bitcoin, it counts a little differently, but this actually looks a lot more like what we've seen in the stock market, in which we have what I was calling an impulse in my last overall crypto state of cryptos update, a clear second wave corrective pullback. And we've actually extended a little bit beyond standard targets. Typically, you don't want to go over the 2.0. I wouldn't say you wouldn't want to, but we don't typically see a rally go past the 2.0 extension. We did, a little antenna-like spike there, and a clearly corrective pullback, a clear A, sideways B wave, and a C wave. That could actually be a B wave triangle if you count it right. And we've started rallying back. So if anything, this could be a first wave, but basically a 5-wave rally up and a second wave back. And we may be in progress. And we look at the internal structure once again. So 1, 2, third wave, hit the exact target we want to hit between the 1.32 and 1.61 extension. Nice sideways consolidation that was shallow. And we had our 5th wave top. So I have a lot of reason to believe that the cryptos are ready to turn their corner. They already may have done so. Now, shifting to the big picture, this could be a big shock to you guys because I've changed a bunch of stuff up, but really nothing has changed since our last update. I've just kind of reordered the counts and changed some of the colors to make it a bit more clear what we have going on. But I'll start off with the MACD. Divergence is still looking good. That is holding. Our big picture had an alternate pattern I went over. So our primary pattern is that this is following the exact same pattern as Bitcoin and Ethereum, in which we have a third wave up, major third that topped in December 2017. That was the big crypto explosion back then. And then we had a big major 4th wave low in March of 2020 that aligns with both cryptos and the stock market. And we had a nested 1-2 setup. And we've gone so deep that it does increase the probability that this isn't actually a second wave. But so far, fingers crossed, knocking on my synthetic wood desk here, we are done because a 1-2 does not invalidate unless you break the origin, which sits at 34, 33. I think that was the exact bottom that we hit in March of 2020. So we got very close, but we didn't break it yet. So if that is the case, then we should start seeing a rally very quickly. That is what the red primary pattern is showing. I know I got the colors all mixed up and stuff. You guys may recall I had a purple pattern here. I've just recolored it to red because it's the most likely pattern I expect us to see. So the A, B, and the C here, these were formerly purple. I've recolored them red because that is the primary pattern I expect. That would call for a 3-wave pattern, a diagonal. The reason for that is that this whole thing could end up being kind of it could be in a diagonal pattern. We've had really strange looking internal wave structures. This could be 5 up, it could be 3 up. And when you look back here, while to my eyes it is impulsive, we have Bitcoin and Ethereum at least looking like they're going to have ending diagonal patterns. So again, it could end up being an ABC or an ending diagonal 5-wave pattern that would project to about a little beyond the top we had in 2017. That's where there's a lot of Fibonacci confluence, as high up as 2267. So that's a long way up from here. And we need to see a lot more confirmation before that happens. So we need to rally into this box between 212 to 388, have a nice corrective pullback, and then we would be off. So that'd be a very bullish sign. That's the bullish pattern. The more bullish pattern is that we finish in an impulsive top. That's what the green pattern is. That's been here. So that is the optimist target, that we have a huge rally ahead of us, a full 5-wave impulse. Until we get, again, that first rally and corrective pullback, we can't really distinguish, but a characteristic distinguishing factor would be blasting through this purple box straight up into the green box for a 3rd wave. So that is a lot of stuff that is very speculative at the moment. So no confidence right now that we're going green. Right now we're trying to get out of this correction. So that's the primary perspective. The orange out pattern has actually changed a little bit, the alternate pattern. I said that we could go as low as 34 to 38 without breaking our overall pattern, but there is that specter that we break our support. So I have this black note here, annotation that says 34.33. That is a major support. The one coin that has done this that I analyze is EOS, and I've talked about how it resets the whole pattern. So if that happens in Dash, if we get that lower low that breaks support, it would reset this entire pattern. So instead of this being the third wave top and this being the red fourth wave, that means that the orange fourth wave is actually here. So instead, this whole thing would be an A, bottom of the A wave in March of 2020. Our rally in 2021 would be a larger B wave. And this lower low would be the completion, the last leg, the C wave of our larger fourth wave correction. That would, again, look a lot like what we see in EOS. And if we saw something like that, we could see the same thing in other coins too. There's a few others that have gotten close to this support. Off the top of my head, maybe Stellar Lumens, because its pattern looks a lot like what we see in Dash. I'm actually going to look at that real quick. Well, we have a lot of cushions, so it's not as likely. I'm pretty sure there's another coin that had a similar situation where it got close to support, but this is all about Dash. So if that happens, we would reset the pattern, and then, well, we would base our fifth wave extension target off of the entire correction. So you have your third wave top, and well, I have this Fibonacci extension built out. So if we drop to, let's suppose, maybe $19, that is where our Fibs base of the Fib extension tool would be, and then we recalculate our upside targets based on that. So right now, that is a very low probability pattern right now. I'd say it's more possible we have a lower low without breaking the support. But as of right now, May 31st of 2022, things are looking pretty bullish. I don't see any sign of anything like that could happen. And when I look at the Dow and the S&P 500 and all that stuff, well, it's been nothing but bullish. I know we had a bit of a scary pullback today, but in the big picture of things, it's a healthy consolidation, probably some kind of a fourth wave. We still got a lot to go, and well, things are starting to look up. So I'll have plenty more updates on Dash as well as the other cryptos. And if you enjoyed my video, don't forget to give me a like. And until next time, thank you for watching and happy trading.